G'day taxpayers. Inflation. Where are we? What's happening? Because I know that over the last month or so, a lot of people have got a real bee in their bonnet about the inflation risks into 2026, that inflation's going to be stubborn, that it's going to edge up, that the central bank rate cutting cycles are close to over, if not over, and including our friends at the Reserve Bank who got really badly spooked by that September quarter CPI, even though the bulk of the price increases were administered prices, that is determined by government and public sector authorities, and not by the market, because market-determined prices increased at an annual pace of about 2.2%. But putting that aside, I've had a look at my favourite indicator on global inflation pressures, and of course that has massive implications for inflation here in Australia. The CRB index of commodity prices, the Commodities Research Bureau index of commodity prices, that is, it's one of those indicators that says that when commodity prices in broad terms are lifting, that there's clearly something going on in the global economy. Supply and demand pressures on things that go into the production process, into food and the like, energy, are increasing at a pace that will probably be passed on to consumers and hence higher inflation. The CRB index has been pretty flat over the last 12 months or so. So it's saying that there's no real inflation pressures coming through. And if we strip out some of the things that actually impact on inflation, so take out precious metals, because gold is not a major input into the production process on much. And of course, it's been one of the reasons why the CRB index has held up reasonably well. So looking at things like energy and other commodities, you've got oil price, clearly very weak. Lumber, coal, iron ore, gas prices, all of the things that are really important for logistics, for construction, are weak, unambiguously weak. And that's a really positive sign for future inflation risks. Throw in the food sector, a really important part of the global economy, so agricultural goods, things like wheat, sugar, corn, rice, they're all flat to down too. In fact, having shown very little increase over many, many years, even if we take out that COVID spike in many of these commodities, we've actually got commodity prices sort of where they were 5 and 10 years ago. So a really interesting phenomenon unfolding on the commodity price sector. So in no uncertain terms, if you were to try to think, well, okay, what are the commodity price pressures on future global inflation risks? And you're seeing that energy prices are weak and falling. You're seeing a lot of industrial-based commodities are weak, flat. You know, copper and a few other prices have increased a bit, uranium and whatnot, but they're not a huge part of the index. And you look at agriculture, foodstuffs, a really important part of inflation. Food is a very high weighting in most consumer price indices. It's under control. So suffice to say, as I sit here now in the latter part of November, having a think about my 2026 forecasts, inflation to me seems to be pretty much under control. And that's with monetary policy, certainly in Australia, still being restrictive, unemployment more likely to go up than down, wages growth, as we saw last week in the private sector, down. I think inflation is going to be surprising on the downside through 2026. And with that, we'll see the RBA do a bit of an about-face on its recent conniptions over the September quarter CPI. Thanks.